Hi everyone. Today let's talk about First Republic getting bought out by JPMorgan. Then we'll go over some pre-market charts for JPMorgan and financials. If you like trading stocks and options and making money, definitely like and subscribe. I make videos every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So JPMorgan Chase bought First Republic Bank's assets after the government auction, and they will make a payment of $10.6 billion to the FDIC as part of this purchase deal. They also entered a loss share agreement with the FDIC for single-family homes and commercial loans, and mentioned that they will not be buying First Republic's debt or preferred stock. This is an advantage for the FDIC because it means they don't have to insure all of the deposits like they had to do with the two previous iterations, and JPMorgan Chase becomes even larger as it is already the US's largest bank. And just to put this in perspective, First Republic saw $100 billion in outflows in just the first quarter of this year. It's pretty interesting here to see that JPMorgan shares are up 2.7% in pre-market trading. The other bidder here was PNC Bank, which is actually 2.5% lower, so there was a hope that they were going to get some of these assets, which to me means that First Republic Bank had some value here and that the bank run might be the singular cause of their failure. In total, it looks like the FDIC is going to have to pay out $13 billion, which is obviously still a substantial amount, but the solution that they came to was supposedly the least cost to the FDIC, and JPMorgan Chase will have to pay back $25 of the $30 billion that was deposited into First Republic in an attempt to save the bank, and they will also get $173 billion in loans, $30 billion in securities, and $92 billion in deposits. JPMorgan estimates that they will profit $2.6 billion, not including the $2 billion that it will likely cost to restructure the bank over the next 18 months. So realistically, it's about $600 million if you do net profits here, but they can still make money on this net profit while they are doing the restructuring, so they can spread out that $2 billion cost over time, which should allow them to be a little bit more profitable. And they reiterated the fact that they will be very well capitalized after the purchase, which is not a big shocker from JPMorgan. They've done very well. I guess the biggest concern for me here is that First Republic is still going bankrupt after the Fed lending facility, which is interesting. So they weren't able to pull enough money from the five biggest banks, which was that $30 billion. They also couldn't get enough money from the Fed in that lending facility. So what really was the issue here? Was this primarily caused by the bank run? Do they have underlying issues that were different from SVB? And really, I want to see a little bit more details about why this bank is going under. It seems like they were given just about every asset that they could ask for, and they still failed after we saw the other two banks already go bankrupt. Moving over to the charts, starting with JPMorgan and the financial sector, you can see JPMorgan is up substantially. They closed around 138 at the end of the week, and they're all the way up to 144.22. They hit 146.35 at one point. Momentum stepping bullish, RSI stepping bullish. Not a ton of volume in the pre-market, but it's still pretty substantial considering. And they've really been on a run, so they were all the way down at around $100, $101 in September and October of this year, and since then they've gone up about 40%. So everything looking pretty good, looking to take out these highs here or above all the EMAs and SMAs, and it does seem like it'll have a little bit of follow through into the session. Moving over to financials, similar thesis, rallying here a little bit pre-market, up about 0.5%. JPMorgan obviously going to have a pretty big impact on this chart. Momentum stepping bullish. We've had consistent steps towards bullish. If it takes out this high here, you might be looking up to $34, which would definitely be a pretty substantial move here for financials. It's definitely been under pressure throughout mid-March here before we set up a base. Then they set up that higher low, and we're looking for that follow through for the higher high. And this will probably give it the catalyst that it will need to make that higher high and test the 200 SMA. And moving over to the NASDAQ and the SPY here on the 4-hour chart, you can see they are both down a little bit here pre-market. Not a lot, but a little. NASDAQ testing my level here at 321.82. If it holds this level, then I'm watching for a push up to 325.77 over the next day or two. Similarly here on the SPY, coming down to retest that 144.69 level. I would guess that we'll get a test of that level at some point today. If we do and it holds, I'll be looking for a push up to 418.12. Momentum on both, stepping down on the 4-hour. RSI stepping down a little bit, maybe look for a retest of the SMA on RSI. That would be interesting. But overall here, still looking very bullish on the trend. Let me know down in the comments section what you think of this acquisition. Is it overall going to be good for JP Morgan? Seems impossible that it isn't. JP Morgan generally makes good decisions. But what will happen to the rest of First Republic's assets? Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.